Hi, I'm Olivia, a custody advisor at Wall Street Prison Consultants. Today we're going to discuss money laundering. Money laundering is a type of white-collar crime generally defined as the illegal act of disguising the amount, source or destination of money by passing it through a complex sequence of commercial transactions or banking transfers. The federal statute that applies to money laundering crimes in the United States, 18 U.S.C. Section 1956, contains a fairly broad definition of money laundering, describing it as the act of knowingly engaging, or attempting to engage, in financial transactions that involve proceeds from a specified unlawful activity. Whether the money is obtained through fraud, embezzlement, drug trafficking, or some other illegal activity, the aim of money laundering is to return the clean money to the launderer in an indirect way and make it look like it was earned legitimately. Typically, the process of money laundering will involve three stages: placement, layering, and integration. Placement is the stage where the proceeds from criminal activity are introduced into the legitimate financial system. Layering then disguises or conceals the source, ownership, location, nature, or control of the money through a series of financial transactions. In the last stage of the money laundering process, integration, the laundered money is then withdrawn from the legitimate account to be used for any purpose, as normal business earnings. The main purpose of money laundering is to allow individuals in possession of the proceeds of a crime to use the illicit money without it being traced back to the crime. Unfortunately, money launderers are sometimes caught in the act, and when they are, they typically face dire consequences. Any person convicted of money laundering in federal court can be sentenced to prison for up to 20 years or ordered to pay hundreds of thousands of dollars in fines. Money laundering is a complicated crime, and it usually involves a network of people. In a typical scenario, a federal money laundering investigation may involve thousands of financial documents, multiple defendants, and complex monetary transactions in both local and foreign accounts. Given the scope of most money laundering schemes, the crime of money laundering is often connected to other federal offenses. It is not uncommon for individuals targeted by a federal money laundering investigation to also face allegations of drug trafficking, bank fraud, credit card fraud, securities fraud, mortgage fraud, or other fraud offenses. Under the Money Laundering Control Act of 1986, money laundering is considered a federal offense, one that is vigorously prosecuted by the federal government. According to the federal money laundering statute, 18 U.S.C. Section 1956, a conviction for money laundering is punishable by up to 20 years in prison and/or a fine not exceeding $500,000, or twice the amount of money that was laundered, whichever amount is higher. Under its companion statute, 18 U.S.C. Section 1957, any person facing charges of spending or depositing over $10,000 of the proceeds from the criminal activity may be fined or imprisoned for up to 10 years, or both. On top of a federal prison sentence and significant fines, any person facing money laundering charges in federal court may be subject to property seizure or forfeiture. That means the government can take control of any assets, cash, or other property gained through illegal money laundering activity. These stiff penalties will be imposed by the court in addition to the penalties for any other federal crimes committed in connection with the money laundering. It is important to remember that being accused of money laundering does not necessarily mean you will be found guilty and incarcerated, since the burden of proof in a federal money laundering case lies with the prosecutor. That means the prosecution must prove each element of the money laundering crime beyond a reasonable doubt in order to get a conviction. In other words, the prosecutor must show the following: you conducted or attempted to conduct a financial transaction which affected interstate commerce. You conducted the financial transaction with the proceeds of specified unlawful activity. You knew the transaction involved the proceeds of some form of unlawful activity, and you intended to promote the carrying on of the specified unlawful activity. In your defense, Your federal attorney may argue that you acted under duress, or that there is insufficient evidence to warrant a conviction, and may also present evidence indicating that you were unaware of the unlawful activity, or that you lacked the intent to commit a crime. The key to obtaining a successful outcome in a money laundering case, or any other federal case, is to successfully challenge the prosecution's case by introducing evidence that raises doubts about your guilt.